Hi friends, should we Indians invest in US stock market? Should we use Indian apps like INDmoney or should we open a demat account with the US stock brokers? And thirdly, which should be my first investment into the US stock market? These are the three most frequently asked questions when it comes to US stock market investing. So in this video, I'm going to simplify US investing in such a way so that you start your US investing journey the right way. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. Do not yet subscribe to my channel. Watch this video for a few minutes. And if you find this content useful, like the video and become a lifelong subscriber to my channel. With that, let's get this video cracking. So question number one, should we Indians look at investing in US stock market or not? 4 data points that we need to consider. Point number one is have a look at my screen, and what you see is the largest companies by market cap in the world. And what you note is likes of Nvidia, Microsoft, Apple, Amazon, Google, etc. Out of the 10 companies, 9 are from United States. And these companies, for example, Amazon, Apple, Google, people across the world use the products from these 10 companies. So the opportunities in the US stock markets are huge. But more importantly, data point number 2. What you see on my screen is how Indian rupee has depreciated against USD in the last 15 years or so. For example, in 2013, if you look at, Indian rupees depreciated by almost 13%. Have a look at 2022, INR depreciated by almost 11.3% in one single year. If you go back to history, you will find that almost every single year, INR has depreciated against US dollars. And as a result, Indians have made more money than Americans from US stock market. For example, if you see 2013, Indians made 18.1% more returns, extra returns than Americans from Nasdaq 100 index. Likewise, if you look at 2020-22, Indians made 7.6% more returns than Americans made from Nasdaq 100. Why? Because Indian rupee has been continuously depreciating. I don't know whether it will continue to depreciate in future or not, but US dollar has become the currency of the world. INR has been depreciating, and this is the fact number 2 that you need to understand, that when you invest in US stock market, because of currency depreciation, on an average 2 to 3% is what Indians have been getting better returns than the American people. Then comes fact number 3, which is geographical diversification, extremely important. Have a look at my screen, and what you note here is that Nifty 50 and Nifty 500, their correlation is 98.1%, meaning if you invest in Nifty 50 or Nifty 500, then you are not diversifying at all, only 1.9% diversification. On the contrary, if you see the correlation between Nifty 50 and Nasdaq 100, it is 23.5% only, meaning investing in Nasdaq and Nifty gives you that diversification opportunity in your portfolio. For example, let's say if Indian economy slows down, then some of your money is parked in US economy might do well. On the other hand, if US economy slows down and if you have some money parked in Indian stock market, then that gives you diversification. Now comes fact number 4, which is the returns from Indian market versus US stock market over the years. Have a look at my screen, and again you see it from an Indian investor perspective. In INR, if I compare Nasdaq 100 returns, you will note that on 1 year basis, Nasdaq has delivered better returns. In 3 year basis, it has delivered better returns. 5 year basis, almost similar returns. 10 year basis, Nasdaq 100 has delivered better returns. 15 year basis, Nasdaq has delivered better returns. These are absolute returns. But now let me speak about risk adjusted returns. And if you look at 1 year basis, Nasdaq has done better, 0.753 versus 0.557. 3 year and 5 year basis, Nifty has outperformed Nasdaq. But if you look at 10 year basis and 15 year basis, Nasdaq has delivered better risk adjusted returns. So from a long term perspective, there has been a better returns coming from Nasdaq versus Nifty. So hopefully question number 1 should be very clear to you in terms of what are the benefits of investing in the US stock market. Let's move to question number 2, which platforms or how should we go about evaluating the platforms for US investments so that you start your US investing journey the right way. There are 2 broad solutions or 2 broad options that you can consider. Option number 1 is you can open demat account with a broker in US. So you are going to open a direct demat account with a US broker. That is option number 1. Example of a US broker might be, for example, Interactive Broker. Again, I'll come to that in a minute. But option number 2 is that you use an Indian app. For example, INDmoney. They have a tie-up with a US broker, right? This is option number 2. Now, how to go about evaluating these two options? Let's understand pros and cons of both the options. And also I'll give you 5 to 6 broad parameters that you can apply to any other platforms, not just these two examples that I'm going to use, which is INDmoney for Indian app and Interactive Broker for the US direct account. These are just examples so that I bring it to life using some examples. So parameter number 1 that we're going to use is the account opening charges. These charges will vary from platform to platform and also time to time. So at the time of recording this video, if I look at INDmoney, account opening fee is 0. If I go and look at Interactive Brokers, their account opening charges are also 0. It really depends on platform to platform and also the time at which you are creating the account. Right now, both the platforms are offering free account opening. Therefore, there is no much difference here. Then comes parameter number 2, which is the account opening process. And this is where both these options differ a lot. In the case of INDmoney, the entire account opening process is paperless because they use DigiLock for Aadhaar validation, PAN validation, etc. While in case of Interactive Broker, when I opened the account, they were asking to upload a lot of documents manually. For example, your bank statements to validate your bank account. For example, income tax return documents for the last 3 years or so. From account opening process perspective, I found INDmoney much more easier and convenient because of complete digital process versus opening an account with direct broker in US, because you will have to upload a lot of documents. They do not really have DigiLock sort of a validation facility integrated. Therefore, it is a manual process. So please make sure you understand this difference. Now moving to third parameter, which is the charges for adding funds. So when it comes to investing in Indian stock market, we add our funds into a demat account. Into INR, there is no charges there. If I add 5 lakh rupees, I see 5 lakh rupees in my demat account. But when it comes to investing in US stock market, we are investing in dollars. But in our Indian bank account, we have the currency in INR. So whenever we add funds to our demat account, the INR gets converted into US dollars. And this is where both these options could differ a lot, and the charges that gets applied in converting this INR into US dollar could vary from platform to platform. So what I did was I did a test. I transferred around 10,000 rupees, roughly 115 US dollars at the time of transferring to both the accounts, INDmoney as well as Interactive Broker, so that I can see which conversion is more cost efficient. So let me present to you both the screenshots here. So this one that you see is a wire transfer to Interactive Broker using my ICICI Bank. The only way to transfer money to Interactive Broker, the direct brokers, is through wire transfer. A lot of people don't understand wire transfer, so the process is complicated in my view. I tried it, I figured it out, and I did around $114 of transfer, which should translate to around 10,000 rupees at the time of transferring it. And what I noted was that in Interactive Broker, I had to pay around 11,214 rupees to get $114 in my demat account, right? Compare this to INDmoney, I had to transfer around 10,295 rupees to get the same $114. So almost 1,000 rupees lower in INDmoney versus Interactive Broker, the direct broker that I use. Now, why there is a difference here? We need to understand there are 3 charges that you need to understand. And the reason I'm explaining these in so detail is that whatever platform tomorrow you choose, you are at least going and checking how much money I am losing when I'm adding funds into my demat account, right? So there are 2 charges that you need to understand. Charge number 1 is the remittance charge. This charge is applied by the bank. Okay, so here in the case of Interactive Broker, when I did a wire transfer from my ICICI Bank added around 1,000 rupees for remittance charges, as you can see on this screenshot here, and there is a GST that gets applied on this 1,000 as well. So higher this remittance charges, higher will be your GST, therefore higher will be your overall charges. While in case of INDmoney, my remittance service charge was around 250 rupees. Now this 250 rupees was for ICICI Bank. Had I used SDFC Bank or Axis Bank, then the remittance service charge is 0 because INDmoney seems to have a partnership with these banks. Therefore, the remittance service charge is 0. But in case of Interactive Broker, Here the charge was around 1000 rupees, which is wire transfer from ICICI Bank. It could differ from bank to bank that you use, but you need to make a note of remittance charge. The second charge that comes out to be is the exchange rate. So when it comes to exchange rate, when I did the wire transfer to Interactive Broker, the exchange rate I got was around 87.62, while on INDmoney I got around 87.32. So there was a slight difference here. INDmoney's exchange rate for that time was lower. I did the transaction at exactly the same time, almost 10-15 minutes difference, so that we can compare like for like. So I got preferred exchange rate in case of INDmoney's transfer versus the Interactive Broker. These two things put together saved me around 1000 rupees when I was doing this 10,000 rupees of transfer to my Demat account. So extremely important point, whenever you are adding funds to platform, you really need to compare the remittance service charge as well as the exchange rate. Next parameter that we need to compare is the withdrawal charges. So for example, when you make profits from the US stock market, either through selling a stock or an ETF or whatever, and you want to transfer that money back into your INR account, then few platforms may charge you withdrawal charges. For example, if I talk about INDmoney, right now their withdrawal charges is 0. You can withdraw as much money as you want back to your INR account. There are no charges right now. But if we compare this with Interactive Brokers, they are allowing one free withdrawal every month. So you can do one withdrawal and there are no charges. And if you do more than one, they charge you per withdrawal around $10. These pricing may differ from platform to platform and also depends on how many transactions are you actually doing. Therefore, please make sure you are comparing these withdrawal charges also, because everything will add into your PNL. Then comes the next parameter, which is the brokerage charges. So again, this will vary from platform to platform, and time to time these brokerage charges may vary. Right now, for example, INDmoney is charging 0.25% brokerage. What does this mean? For example, you invest in US stock market and you take an order of, let's say, $100. 0.25% of $100 comes out to be 25 cents. That is what the brokerage that you are going to pay to INDmoney. Compare this with, for example, Interactive Brokers here or any other direct brokers you can compare, and their plans may be very, very different here. I'm using this as an example here. For example, they are having two plans. One is the tiered plan, which is based on the volume. This is essentially suitable for large investors who take huge buys and sells, right? The second one is fixed one, which is not based on the volume. It is a fixed one. Here they are charging you $0.005 and they have a minimum charge of $1. For example, if you are taking an investment of, let's say, $100, right? The minimum that you will have to pay is how much? $1. So again, you can compare these brokerage charges as well before you decide the brokers, because if you are serious about investing in US stock market, your brokerage charges will also add up, as we do in Indian stock market. Some of those brokers are free, some of them charge. Again, these plans will change time to time, but before you decide any platform, please make sure you compare the brokerage charges as well. So these are the different charges that get applied if you're using a INDmoney sort of an Indian app, or you're using a direct broker account that is coming from US. Choice is yours. In the description, I have given you the link. You can go and open your Demat account if you want to start your US investing journey. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to curate content for you at zero cost. Also, you can consider joining my YouTube community, where I post in-depth analysis almost on daily basis using various assets, for example, stocks, mutual funds, ETFs, and you're going to learn a lot from those insights. The feedback of this community has been excellent. Go to my channel, find the join button and be my guest. Lastly, I've also launched podcasts. Please go and subscribe to the channel. You'll find the link in the description or in the pinned comments. With that, let's move to question number 3, which is, which should be the ideal candidate for first US investment that you want to make? In my view, that has to be very, very simplistic solution, and index funds is a great way to start investing in US stock market. Now, there are a lot of popular indices in US stock market, exactly like what we have in India. For example, in India, we have Nifty 50, we have Nifty 500, so on and so forth. In US, there are two popular indices. Number one is NASDAQ 100 and number two is S&P 500. Now, let me quickly walk you through some of the differences between these two indices and also run you through few ETFs that we can compare. So let's first understand NASDAQ 100 and S&P 500. So the first point, let's have a look at the past returns. Although past returns are never guaranteeing the future returns, but also these are good indicators. Between July 2007 to May 2025, if we compare, NASDAQ 100, which is the blue line here, has clearly outperformed S&P 500. And if you look at this data here, you will note that from an annual rate perspective, annual CAGR returns perspective, Nasdaq 100 has delivered 15.21% returns, S&P 500 has delivered 10.32%. You will also note that standard deviation of Nasdaq 100 is higher, meaning that it is much more volatile as compared to S&P 500. If you look at the Sharpe ratio, Nasdaq 100 has delivered better Sharpe ratio, which is the risk adjusted returns. Now, if I come down here, break it down to, let's say, last year, last 5 years, last 10 years, you will quickly note that Nasdaq 100 has outperformed S&P 500. Now, if I talk about, for example, other factors, which are the sector allocation and also the volatility, one thing that you need to know about sector allocation is the Nasdaq 100 is heavily skewed towards technology. 57% of the money gets into technology, while S&P 500 is much more diversified, because if you see, technology is only 34% here. Nasdaq 100 does not include any financial companies. That's just how the index is built. But if you look at S&P 500, it has got 12% exposure to financials like banks, for example, or lending companies. So S&P 500 is much more diversified. Nasdaq 100 is much more towards technology. So it really depends on whether you want to invest in technology sort of companies or you want to go much more diversified. Choice is yours. You have seen the returns, you have seen the volatility as well, and therefore you can make your own decisions. Let me now come and compare the ETFs for both Nasdaq 100 as well as S&P 500. Here are top 3 ETFs when it comes to S&P 500. Please make sure none of these are recommendations. I am showing you the popular ETFs and we are looking at some comparison data factors here. Number 1 is Vanguard's S&P 500 ETF, which is WU. This is the largest ETF when it comes to S&P 500. Why? Because you look at the asset under management, it is touching close to 1.49 trillion US dollars. It is the largest one. Then second one is Spider here, which is called Spider S&P 500 ETF. This one has got 650 billion US dollars into it already. And then third one is iShares Core S&P 500 ETF, IVV. In fact, these codes here, VOO, SPY, IVV, if you go and type into your Demat account, for example, INDmoney's platform, you will be able to easily find these by using these codes, VOO, SPY, IVV, and so on and so forth. If you look at these 3 ETFs and compare, for example, their returns, let's have a look at that. In the last 5 years, minor differences in the returns. As you can see, 93.53%, 93.46%, 93.63%. Minor differences, mainly because of potentially expense ratio. If you look at number 1, VOO and IVV, their expense ratio is pretty same, 0.03%. Spider has got slightly higher expense ratio, 0.09%. But if you look at the liquidity, these are very, very liquid ETFs because huge money has been poured into these ETFs. These are the 3 most or the largest ETFs when it comes to S&P 500. Again, I do not know which one you want to invest. I do not want to give you any recommendation, but this data surely will help you. Then comes Nasdaq 100 ETFs. The 2 which are the largest one are QQQ Series 1, which is Invesco QQQ Trust ETF. And the second one is also from Invesco QQQM. The main difference between QQQ and QQQM is the expense ratio here. QQQM is the recent addition. It is the newer one. It was added in 2020, while QQQ Series 1 has been out there from 1999. Therefore, the expense ratio of QQQM is slightly lower, 0.15% versus 0.20%. But from an AUM perspective, QQQ is much larger. It is getting almost 358 billion US dollars versus 55 billion dollars. If you look at the returns comparison in the last 1 year, slightly better returns by QQQM, 16.99% versus 16.97%. Again, past returns do not indicate or guarantee future returns. Please make sure you understand that. Since this did not start in the last 5 years, there is no point in comparing it. Let's go to 3 years. 3 years again, if we see, the returns are very, very comparable. So there is not much difference, but these are the 2 ETFs. There are many other ETFs out there for both the indices. I've only touched upon the largest ones here so that you get an idea about where to start from. Again, please make sure you do not take any of these recommendations. You can use these codes QQQ, QQQM into the Demat account, as I said, to easily find these ETFs if you were to invest. So in this video, I've spoken a lot about US investing. In the upcoming videos, I will also start talking about a lot of advanced topics when it comes to US investing. For example, the taxation on the US investments. For example, the TCS limit. For example, how to go about looking at US stocks. There is a lot of good content that will come out your way. But please make sure you watch this video without skipping so that you start your US investing journey the right way. You'll find the link to open the Demat account in the description and in the pinned comments. And I hope you enjoyed this video. If you did, like the video. Let me know in the comments a simple thank you. I look forward to see you in my next video. Until then, keep rocking.